夠人數，今日開會。
We have attained the quorum and now call the meeting to order. Item 1, a regular meeting scheduled for today. Unless members have any comments, we move on to item 2. Date of next meeting and items for discussion. The next meeting is scheduled for June the 5th, 2017, a Monday. And there are going to be quite a number of items. We have 4 items here on the list. The first one is briefing by the Financial Secretary on Hong Kong's latest overall economic situation. I think if you are concerned about the Bay Area issues, you might wish to take the opportunity to put questions to the Financial Secretary. The second item is an annual briefing by the Financial Reporting Council. The third one is subsidiary legislation and code relating to the open-ended fund company regime, or OFC, for application of the Multilateral Convention on Mutual Administrative Assistance in Tax Matters. Time will be tight for the meeting, and I propose that we have the meeting between 9:30 and 12:30. Usually we have the meeting at 10 a.m. We advance the meeting by half an hour. All right, unless you have any further comments, let's move on to the next item. Shall we invite Mr. Norman Chan and his team, please? Good morning, Chairman, members. I'm here to brief members on the work of the Hong Kong MA. There are a couple of areas that I'd like to brief members on. The first one is the assessment of risk to Hong Kong's financial stability. In the past couple of months, we've seen the global economic situation has returned to normal. If you look at the trade figures and also like in the chart, the global manufacturing purchasing managers index, we have seen an increase from the lowest point last year, and it is a pretty apparent upward trend. For the 3 major economic areas, the US, Eurozone, and Japan, in terms of inflation or deflation, we have seen a receding trend. The blue line is the inflation, headline inflation, or the underlying inflation. They've gone up to about 2%. The same can be said about the Eurozone and Japan. The deflationary pressure was pretty high. It's gone back to the positive territory. Now, the better sentiment doesn't happen to the major industrialized countries. In emerging markets, we've also a better sentiment. Now, this is a rather complicated chart. The red bar represents 2013. Mr. Bernanke said for the first time that there would be a tapering of the bond purchases there was some strong response, and the U.S. Treasury yield has seen a 100% growth rate. The blue one is the emerging market. Since the tapering of bond purchases in 2013, we've seen a rise of 74% basis points. Now, after the presidential election in the U.S., the 10-year Treasury yield has also increased from the blue bar 43% basis point. So the market has reacted to the U.S. Presidential election. On the right-hand side, the blue bar there, it is in the negative territory. It means that the Treasury yield has dropped a little bit in the emerging market. So there is a reduction in the interest differential. That there is an improvement in the sentiments in the international economies, and the investors feel that the tones in the emerging markets are getting better, and they have a positive view of the emerging markets. So it is different from the situation in 2013. People have better sentiments and feelings about the emerging markets. Turning to the U.S., the economic fundamentals are improving. The business and consumer confidence indicators have surpassed the pre-global financial crisis peaks. The SME's index it is 100.7, and now it is 104. So they are more optimistic about the economic situation. The labor market continues to improve, and the unemployment rate is 4.4%. In the U.S. Economic situation, it is close to full employment. I mentioned the deflationary risk. This has receded. We have seen an increase in wages, and the oil prices and commodity prices have also stabilized. So deflationary risk has receded. The Fed has hiked the rate in March, and it is expected that there will be 2 more hikes this year. Now, even if the fundamentals are good in the U.S., there are still policy uncertainties in 3 areas. These have clouded the global economic outlook. Now, very briefly, the first one is trade. The second one is tax reforms. Third, measures to stimulate the economy and employment. Now, for trade, after President Trump has taken office, he's withdrawn from the TPP, and he also said that NAFTA has to be renegotiated, although no action has been taken. He talked a lot about the bilateral trade deficits, and he's asking the countries to take action. And also the border adjustment tax. There is no clear indication about that. But all these measures, if implemented, will pose some negative effect on world trade. Now, if you look at this chart, red is global economic growth, blue is global merchandise trade volume. After the financial tsunami, the global growth has not been fast, but in terms of trade volume, it is rather slow. Over the past couple of years, the world trade volume has not been good. If protectionist measures are to be implemented in the U.S., then it would certainly dampen the declining global trade. Tax reforms, there are so many measures, but we're not sure about the details and when they will be implemented. Now, one of the measures that is likely is to induce corporate repatriation of overseas profits. In 2004, the U.S. implemented such an arrangement to induce corporate repatriation of overseas profits, and that was a special act. There was a 5.25% tax rate, and it is expected that there is an accumulation of 1.1 trillion US dollars, and 1/3 was repatriated back to the US. Now we're talking about 3 trillion US dollars of overseas profits held by U.S. corporates. Now, how they are going to go about doing it and what tax rate would they induce repatriation, we don't know. Now, if they do the same that they did last year, and 1/3 of the profits would be repatriated, we're talking about 1 trillion U.S. dollars. And that will have some impact on the emerging markets in particular. New U.S. policies. Now, there are a couple of things that might fuel inflation in the U.S. Now, trade protectionist policies, the BAT, Border Adjustment Tax, if this is implemented, the imported products will be subject to higher tax. And the products in the U.S. will rise in prices if the fiscal stimulus measures are to be implemented. Given the low unemployment, 4.4%, close to full employment, quite inevitably these measures would push up wages amid the low unemployment rate, and this would have an impact on the U.S. economy. Now, the fiscal stimulus and tax concession measures would aggravate fiscal deficit and push up Treasury yields, and this will also tightened the monetary situation.
So I'll now move on to the global assessment for emerging economies, and we see an improvement, but the world trade and supply chain still have some uncertainties. The pace of U.S. interest rate normalization, because of various reasons, remains uncertain. I won't talk too much about Europe. Their economy is improving, but they have some structural reform in the employment market, but it's still slow, and unemployment is still high. We also have increase in geopolitical risk. We saw there was election in France, and the extreme right came into power. So I think the political risk now has come down. And we'll also see an election in Germany, and Merkel will win. But with Brexit, and we have terrorist acts in Europe, and there are also some military conflicts and refugee problems. Last night, North Korea also did some missile testing. So the Korean Peninsula is still a gunpowder peg. So let's move on to mainland China. This is a forecast for the Chinese economy, and this is the IMF forecast for 2017. In October 2015, they estimated that growth was 6% for this year, but they subsequently increased the forecast, and the current forecast is 6.6%. This is in line with the mainland government's own analysis. That is, after the first half of last year, some volatility, the Chinese economy has stabilized. And we can refer to some indicators. The left-hand side diagram, that is the PMI, Purchasing Managers Index, and we see the non-manufacturing, that is the service industry, has been doing quite well. It's hovering at the 50s. Manufacturing was weak, and it was straddling the 50-point line, and recently it has moved into positive territory. The diagram on the right is private fixed asset investment, In July of 2016, it was a low point. There was zero growth, but recently it has improved. So that's a leading indicator of that the Chinese economy is stabilizing. A lot of people are concerned about capital outflow from China. The red line indicates that China's foreign reserves change from its peak of some 3 trillion. We see that there has been a reduction. It now stabilized at 3 trillion level. Recently, we have a positive outlook on the Chinese economy, so confidence has improved. So the capital outflow pressure has eased somewhat. But China also has some areas of concern. There's a risk in the residential property. On the left-hand side, we have property price changes that we see from last year. There have been a lot of control measures. We see in the first-tier city, second-tier cities. First tier was rising faster than the second tier, and recently we see a slowdown. For third-tier cities, there hasn't been much change. And on the right-hand side, we have inventory to sales ratio diagram, and we see the blue and red, the third tier and the second tier, first tier cities. It takes 10 months or less to consume inventory. And if you look at the peak of 25 months, it's now down to 14 months as an improvement. And this should continue before we see there is a real significant reduction in risk in second and third tier cities. Now, coming back to Hong Kong, first, we want to look at our banking industry, the loans. We see from this diagram the red bar, the figures for this quarter. There is some growth in loans, and it's quite substantial. On a quarterly basis, it's 4.6%. If you annualize it, it's 18.5%. So the demand, can you multiply by 4? Well, the bank loans in the first quarter are optimistic. So now let's take a look at the red line. That is the classified loan ratio of retail banks. That is non-performing loans. Recently it has been 0.7%. That's a very healthy level. Now, a couple months ago, classified loan ratio was 0.81%. It has improved a little bit. That means that the Hong Kong banking sector, the quality of loans is very good. Now, on the property market, this is the transaction diagram. Last November, the government had a new sales duty, and we saw that transactions came down, and in January this year, there were some 1,400 transactions, and then subsequently the atmosphere improved, and we saw an increase in transactions in April. We had some 7,000 transactions, and the first-hand market had an improvement. They make up 37.5% of total transactions. Now, if you look at the property prices, the blue bar is from Rating and Value Department, and we have this red line, Center City Leading Index. You can see that they are moving in line. In 2015, we had the seventh counter cycle, and we saw that property prices were continuing to go up, and by September 2015 it went down, and we see that there was a period of 6 months downward trend, a drop of 11%, but with the coming of 2016 March, the property prices went on an upward trend. And in March, figures from the Rating and Valuation Department, it had exceeded the peak of September 2015. So if you look at the the purchasing power, let's take a look at the right-hand side. The mortgage payment to income ratio. So we see the latest figure is 71.5%. Compared to 97, the peak before the bubble burst, it was 107%. It seems that there's still a way to go, but we need to bear in mind that in 97, the interest rate was more than 10%. It was 11, 12, 13%. So the ratio to household income was very high. Currently, the interest rate is 2%. That's a very big difference. So even though housing prices are going up, it seems that the interest payment is not very high. But bear in mind, this is floating interest. So if we're talking about a 20, 30-year mortgage, the interest trend in the future will have a significant impact on affordability. So if you look at the blue line on the left-hand side, if you look at the property prices, and if you look at the household income, it's already 16 times. So it has exceeded the second quarter of 97 or 14 times. That means the public household income, the affordability is getting worse and worse. So we also take note that real estate developers, their financing with banks is more aggressive. Their tenders and bids are being more aggressive, and they also provide mortgage to first-time buyers of they can provide 80%, 90% mortgage. They don't even need ID, and so banks and real estate developers, it leads to more risk, and we need to strengthen our control on that. And on 12th of May, we introduced measures. We had tightened the caps on ratios for construction financing. And second, we required banks to set aside an adequate amount of capital with reference to the level of mortgage exposure of property developers. So that was a measure implemented on 12th of May, and on the 19th of May, we saw that there was an increase of risk, so we introduced the 8th round of countercyclical measures to strengthen banks' risk management, and there were 3 areas that we wanted to deal with. We wanted to raise the risk weight floor for new residential mortgage loans granted by banks using internal ratings-based approach from 15% to 25%. And for borrowers with one or more pre-existing mortgages, we lowered the applicable loan-to-value ratio cap by 10 percentage points. And for borrowers with income mainly derived from outside Hong Kong, we lowered the applicable debt servicing ratio limit by 10 percentage points. So to summarize, the global economy is improving, but there still exists some uncertainties. And under the linked exchange rate system, U.S. interest rate is normalizing, and this will cause a gradual rise in local interest rates. Now, given the rise in property prices locally, it will further affect the affordability, and there's a risk of overheating in the property market, and when there is a counter cycle, there will be greater repercussions. And recently the MA has taken measures to strengthen the resilience of banking system to shocks, but I need to remind the public that they need to manage their risks because the public have a big responsibility. Purchasing property for investment or for self-use, it's a high leverage, high stakes transaction, and once the transaction is complete, they need to bear market risk, interest rate change, and I'll now defer to my colleague. Well, let me go through some few points. Just now, Mr. Norman Chan showed you this slide regarding loan growth. The annualized increase rate of 18.5 came from the first quarter figures. So in the first quarter, can we just multiply that by 4? Well, we did do some analysis for credit growth in the first quarter, and we saw that the growth was quite wide, whether it was local or overseas loans. In the first quarter, there was quite a good growth, and trade financing, especially in March, we saw that there was an acceleration. So overall, we don't see the growth biased towards one sector. And we also liaise with the industry. The growth in the loans came from corporations. It was a significant increase from last year. And we are keeping a close eye on this change. Now, we do have some work that is related to legislation regarding international standards. This year we will have 2 subsidiary legislations that need to be amended. The first is capital rules. Next year we have 3 new international standards, and we need to make some amendments. We need to amend the banking capital rules. We had already tabled the information to legislators, and if you're interested, we can discuss this. Regarding next year, we also need to implement a Basel III leverage ratio. It's related to the Stability Board's requirements, and we need to make some amendments in that area. More importantly, in the fourth quarter, we will have a principal legislation, an amendment of the banking liquidity rules, because we need to implement the Basel III net stable funding ratio, and we have to amend the banking ordinance to implement Basel Committee's new large exposure framework, and we also need to have a Financial Stability Board standards relating to recovery planning. We need to do this exercise. Now, regarding the large exposure framework, aside from principal legislation amendment, we also have some subsidiary legislation that needs to be drafted. So this legislative work, we hope that we can implement it by next year.
As regards resolution regime, members probably remember in the middle part of last year we have the resolution ordinance enacted. In April, we came before members to brief members on the protected arrangements regulation. The draft has been tabled before the Council on May the 17th. Now, with the implementation of the resolution regime, we will be publicizing a number of policy papers, like institutional arrangements for the discharge of statutory functions, core information requirements for resolution planning, and we do need to announce the policy arrangements. The other thing we need subsidiary legislation for is the loss absorbing capacity requirements. Consultation is expected to happen by the end of the year, and we will introduce the details to the Council next year. The other thing is financial inclusion. Last time, we also briefed members on how in remote areas, in particular in housing estates, they can strengthen the branch networks. There are 8 banks that have undertaken to introduce 10 physical branches and 3 mobile branches. In early May, 2 physical branches have been up and running in Sha Tin and in Jinshui Wai. And in Q3 in Tin Shui Wai North, there is going to be another physical branch, another one in Kwai Chung. All the other ones are coming on stream successively because the banks will have to identify a suitable location. They have to negotiate the tenancy agreement, which will take time. For the 3 mobile banks, one has come into operation. It will be making its rounds in 6 housing estates, providing banking services. Other than bank branch network, we're also discussing with the banks to provide barrier-free access to banks. Like there can be counters at lower level to facilitate the disabled. And for the visually impaired, we can also provide the barrier-free ATM machines for them. We are discussing with the trade for the barrier-free services. They should provide more practical guidelines. The other issue is the opening of bank account. Now, for overseas enterprises, for startups, they encounter difficulties in opening bank account in Hong Kong. We have asked the trade to implement improvement measures. Now, they do have the review mechanism. If someone turns up to open an account and is rejected, there is a review mechanism to look into the case. This review mechanism has been operating pretty well. From the feedback, we understand that there is an improvement in customer experience. In March, at the Hong Kong MA, we have set up a dedicated team to deal with this issue. In our website, we do have a dedicated website to provide more information and to make it easier for us to collect feedback from the applicants. In April, we have talked with 21 chambers of commerce and 28 banking representatives in a seminar to see what more can be done to strengthen the system. The chamber's feedback is that there has been improvement in customer experience. Of course, we will do more through the concerted efforts of the trade and the Hong Kong MA. We will improve this situation. I hand you over to Henry. Let me brief members on the financial infrastructure. The first one is the central bank digital currency research. We started this research in March. We collaborated with 3 note-issuing banks, the Hong Kong Interbank Clearing Limited, and R3 Consortium, with about 80 financial institutions. In this first stage research, we'll look at the retail financial market and also the technical feasibility of the transaction and the risks involved. It is expected that the research will be completed in the 4th quarter. Depending on the findings of the research, we'll decide on the way forward. Second, distributed ledger technology, or DLT. In November last year, we published the first report, and we are getting on with the second stage research. We will be looking in greater detail the applicability of this technology, the supervision, and the risk management issues. The results are expected to be published by the end of the year. Fintech Supervisory Sandbox, or FSS, this was launched last year. The response was pretty good. Many people did express interest. 6 banks have used FSS for 15 pilot trials, neither of which have been completed. The fourth one is a new one. It is the accelerator. We cooperate with the Cyberport. This was launched in March this year. It is a platform to allow banks and SVF operators to organize fintech competitions. The idea is to identify solutions and to identify talents for cooperation. In May, there were 2 banks being involved. Hang Seng Bank has completed the competition over the weekend, and the other one will not be completed until June or July. We are quite interested in this. We'd like to have more competitions for under this program. The last one is FinTech Career Accelerator Scheme. This was launched towards the end of last year. More than 400 applicants have come in, and offers are being made to successful students. And the attachment will begin in July and August. Development of financial market. Bond Connect. The Hong Kong MA and the PBOC announced the Bond Connect on May the 16th to provide a more convenient cross-border platform that facilitates trading of mainland bonds by overseas institutional investors. Now, the first part is settlement. The CMU of Hong Kong MA will be joining hands with the mainland institutions to provide greater convenience. Trading, we will have a new platform so that the overseas investors and mainland dealers can be connected for direct trading, and technical preparatory work is underway. Offshore RMB business, it is operating smoothly. We have something like $900 billion in average daily turnover. Now we have the IFFO in March. There were 2 debt financing and investor roundtables this March with a lot of participants. We have put together a checklist regarding how we can minimize the risks and also to channel the investment in the infrastructure development. The Chief Executive of Hong Kong MA took part in the Belt and Road Forum for international cooperation to promote the strength of Hong Kong as an investment and financing hub in the Belt and Road Initiative. Investment income, like Mr. Chen said a moment ago, in the world, the economy is getting better. The world equities market is also improving. In particular, the Hong Kong equities. In Q1, the worries over the mainland market have receded. Now, the U.S. dollar has weakened. The populism has receded in Europe. Eurozone has stabilized. The concern over the capital outflow has also receded. Now, let's have a look at Q1. Here on the left-hand side is the Q1 performance. We have made $14.3 billion for Hong Kong equities, 24.5 from other equities, 6.4 billion from bonds. For other investments, the private equity fund and real estate, we don't have the figures. Foreign exchange, $11.9 billion. For Q1, the investment income is $57.1 billion. Here The last but one, fee payable to fiscal reserves are $5.6 billion. That's in accordance with the 2017 rate of 2.8%. Let me turn now to the annuity scheme. Now, there has been concerns and a lot of discussions about the Hong Kong MC life annuity scheme. The Mortgage Corporation started looking at the financial options for the retirees so that they have more cash at their disposal. In April this year, we've gone to the Mortgage Corporation's board. Basically, an approval has been given for the life annuity scheme. There are three major principles under the scheme. The first one is for those taking part, the scheme has to be simple and easy to understand. It should be attractive to the annuitants. Second, the annuity carries risks, and there is the risk arising from the fluctuation in the market and also the age. The relevant risks can be prudently managed by the insurer. Third, subject to the above two, we have to conform with commercial principles, and it has to be financially viable and sustainable.
I'll feature on the key design features of the life annuity scheme. The applicant has to be 65 or above, and we have a cap set at $1 million, and the lower floor is 50,000 Hong Kong dollars. And if you have a 4% internal rate of return, males at 65 years, if they have a $1 million premium, then every month they can receive $5,800. Now, we have a quota tentatively at $10 billion. It will depend on the market response, and most importantly, it will depend on our risk management. The work we're doing right now covers three areas. At the Mortgage Corporation, we are engaging an independent consultant to validate the details of the scheme, and we are also seeking authorization by the Insurance Industry Regulatory Authority. We need a license, and we also have to develop concrete proposals on arrangements for premium investment, management, and capital requirements for MA's consideration and approval. So we hope that we can launch the scheme by mid-2018. That would conclude my presentation. Thank you, Mr. Chan, and your colleagues. Those who wish to ask questions, please raise your hand. We have 5. Chan Zhanying, Mok Lai Gong, Wu Jiwei, Yip, Regina Yip, Yu Chong Yim, and Ms. Starry Lee, Chan Ginpo. 4 minutes each for Q&A. Thank you. I'm very happy to see that we have a lot of good developments, and previously we didn't have sufficient retail banks to serve the public, and I had suggested whether we could provide some convenience for the disadvantaged group. And this morning we have a newspaper report saying that is having a positive review. So if there is an agreement between the banks and retail outlets, what can you do to facilitate this proposal? And recently Moody had downgraded China's credit rating and also downgraded Hong Kong ratings from AA1 to AA2. So has the government assessed how this will affect Hong Kong's financial stability? And third, I see that we have a coin collection drive, and the IT panel, when they visited the Cyberport, we saw some young people. They invented a piece of software, a HeyCoin, and they could convert coins to some electronic payment, or you convert it to vouchers. So the MA is using a mobile coin collecting vehicle. So could you cooperate with these young people? I'll respond to the second and third question regarding Moody's downgrading. Their reason is that they are reviewing China's rating, and they feel that it has to be downgraded. In the past, their practice was they would link Hong Kong's credit rating to China. It's a very mechanical link. So we do not agree with Moody's downgrading decision, because you see that from 2015 there was some volatility in the stock market, and they had undergone some reform. So we had some concerns regarding capital outflow, but from the second half of last year, we see that the Chinese economy has stabilized, and the different indicators indicate that there's an improvement. So coming back to Hong Kong, we saw our bank loan quality not only have NPL not worsened, it has even improved. So we don't agree with the Moody's downgrading. What impacts does the downgrading have in general? When there's a downgrading, the bond raiser cost goes up, but I think it'll have a minimal impact on Hong Kong because the SAR government, we have a lot of financial surplus. We do issue bonds, but that's a demand in the market, so it's not a large amount. So we don't have it doesn't have an impact on our costs. Well, private companies do issue bonds, but these are large companies. They have a good credit rating, and the investors are familiar with these companies. So I think this slight downgrading doesn't have a significant impact on our situation. Regarding coin collection, we welcome any new inventions or innovations, because we only have 2 mobile coin collecting vehicles, and we don't have comprehensive coverage. So if some people have developed a piece of software that can do it in shopping malls, and we will follow up on the cost effectiveness. I'll also have a colleague respond to the retail. Mr. Chan mentioned that we have required the Bank Association of Banks and the relevant retailers. They are in discussions. We know that they have had a few rounds of discussions, and if the retail outlets can handle it, and if we have their support, I don't see any regulatory obstacles. We will continue to liaise with the industry to conclude the study. Mr. Charles Mok, just now, Norman Chan from the MA and his colleagues referred to the global economy recovering, and especially we have data from the US, but the Hong Kong public don't feel that improvement. If you say that we cannot underestimate the risks in the new American government, there are a lot of uncertainties. You mentioned in your report, there's protectionism. You talked about repatriation of funds. We see a lot of big companies are cutting staff, and we might even see repatriation of jobs. So we might not see a lot of U.S. companies doing that in Hong Kong, but recently we see a lot of multinationals. They are multinationals where they are reacting to uncertainties, and they are cutting staff, they are cutting costs, downsizing. Well, of course we're worried about downsizing. It might not be directly related to financial policy, but it does. We do want to have a response and a policy. Now, we see when there are computer failures over the weekend, it can lead to a lot of financial loss. We're talking about 100, 200 million pounds sterling. We also heard of overseas companies in Hong Kong, such as Disney, that might downsize. Now, coming back to banks, in the past few months to a year, we have seen the largest local banks, they have been downsizing, especially in IT department. And I heard there has been a room where they have 10 or 8 cases or dozens of cases. So if you look at these cases, they can occur at any time. And I'm worried that the outsourcing to India overseas will continue, and permanent posts will become temporary posts, and temporary posts will become short-term contracts. The staff are worried about job stability. They cannot afford a mortgage, so it comes back to you anyway. So this is a serious situation. This has happened in the past. They had to downsize and then they had to recruit again. But there was a big impact on staff morale. And I'm worried, in recent years we're so dependent on IT. The risk is also high. So how will you manage the bank's risk? Thank you, Mr. Mok. That's a very broad question. As a regulatory regime, we look at risk. A lot of commercial decisions, we don't want to interfere with these, but for the banking sector, we welcome its development and growth. It is good for job opportunities and so on. But when they recruit staff, we also look at it from a risk perspective. If they add staff very quickly, we have to see whether the system can support it. They have sufficient training and so on. So when they downsize, we won't object to the downsizing. It has to be done through a risk assessment, whether they will lead to the systemic risk, where do they downsize. We will look into all that before we provide opinion. Now, regarding outsourcing, this is a trend, and the computer systems, cloud services are outsourced. We do have a regulatory role. So before banks outsource large services, they have to discuss it with us. We have to consider whether there's risk before we allow them to do so. Mr. Wu Ji-Wai. Well, recently we had 2 incidents. The MA limited the mortgage ratio, and we also have a Moody's downgrading. I remember this February when we talked about the high ratio mortgage. At the time, the MA told us that these are not problematic and it doesn't lead to a systemic risk. So in just a few months, we had a turnaround. So aside from your observation of upward trend, were there other factors that triggered your efforts in management of this area? Of course, if you look at the financial crisis in the U.S., when they have these, when they repackage the mortgage and sell it to the market, then their risk is exposed. So do you see that financial institutions, they are repackaging mortgage debt and introducing it to the market and conducting financing, and does that affect financial stability? Well, otherwise we shouldn't see such a big turnaround where there wasn't a problem and now you have to strengthen the regulatory efforts. Now, regarding Moody's downgrading, they say that Hong Kong has a correlation with China and the mainland China risks, since we're so intimately connected economically, so there's a high correlation. One issue that I have identified in your paper is credit growth rate. Recently, the mainland, they use their assets to as collateral, and they raise money in Hong Kong and invest in the Hong Kong's economy or investment market. So I want to ask, has the MA assessed this type of financing? What's the scale, and what is the accessible amount, or what? And on this point, how can you conduct risk management? Mr. Chan, thank you, Mr. Wu, for the question. I'll respond to the first group of questions regarding the real estate developers' mortgage services. Well, according to the information we receive, when people purchase or register to purchase, they can get a loan. They don't care too much about your income and ability to service a mortgage. So if you look at the American history, they might call these prime mortgages. We didn't identify them recently. We had already been aware of it last year. And when it's first started, it was on a small base. But if it grows quickly, it would accumulate a large risk. So banks do finance indirectly the real estate developers, so risk will go up. And we have to rely on the banks to collect information. Before the 12th of May, the intelligence we collected could confirm that this growth was very quick. And we also get a lot of information from the market that when property is sold, it's through this high ratio of mortgage, and we need to do something to prevent it from getting out of hand. So that's what we did on 12th of May.
As to repackaging, we haven't heard a lot about the developers repackaging these mortgages. Now, in fact, the loans that do not fulfill the anti-cyclical measures to be repackaged like this. Arthur? Now, for loans that are related to the mainland, this is one of the major areas of supervision. Mr. Wu mentioned one of the types. Now, we emphasize that when banks are dealing with these kind of loans, they have to exercise the due prudence. Now, if there are problems with the loans, will there be sufficient collateral as a pledge for the loans? Now, we have asked the banks to have these kind of abilities, so we do monitor the risk management. As to the total volumes, I don't have the figures with me. I can supplement the information later on. From our point of view, it is a matter of the quality of credit. We do have the figures, the ratio regarding the classified loans related to China. It is something like 0.8%. It is slightly higher than the non-performing loan ratio, but 0.8%. It is a pretty good level. We're not too concerned about it. Over the years, the banks have exercised a lot of risk management. Ms. Regina Yip. Mr. Charles Mock referred to the retrenchment in the IT sector, and he expressed his concerns. Now, Mr. Chen went to the Belt and Road Forum on May the 14th, and you've also attended the forum. What good news do we have? In Macau, they have 20 representatives. In Hong Kong, we have 30. For provinces, they have half a dozen. But Hong Kong is an international financial center, and there is high expectation on Mr. Chen. Now, what positive news do you have for us? Thank you, Regina. Now, we attended the Belt and Road Forum. This is an important forum. I attended the panel discussion. Hong Kong importance attached to Hong Kong because we do enjoy advantages regarding the financing for Belt and Road. I introduced our strength. I also introduced IFFO that was set up in July last year. When I took to the stage, there were 8 speakers that was arranged by Beijing. Now, for the 8 speakers, there was a representative from Blackstone, ICBC, and private equity fund, and they are the partners in the IFO. It shows that this new cooperation platform will bring together all the interested parties in the Belt and Road. All the companies and all the individuals are brought together. Eddie already said that in March we had a roundtable regarding debt financing for investors. That's for the private investors making investment in the infrastructure development in the Belt and Road countries. We talked about the concerns and so on. Now, this checklist has been posted on the web. Going forward, we'd like to have a more specific platform for the different investment projects, and it will be easier for them to identify the financiers. If there are any further specific details, I'll bring members up to date. Any follow-up? Well, of course, I haven't used up my time. In the business sector, they are cautious about the Belt and Road initiatives because of the long payback period and also the risks involved. Are you going to introduce the low-risk projects as a pilot for the business sector? Would there be any new financial products to increase the financing? Infrastructure financing is more difficult of all the investments because it would involve the acquisition of land and compensation and environmental assessment. So these are of a larger scale, and the repayment period would be long. There are some companies that have special expertise in this regard. For One Belt, One Road, the business opportunities do not arise from infrastructure alone. There are trades and manufacturing that would present opportunities. If we can provide a platform, if we can heighten people's awareness, then there would be opportunities coming up. Dr. Would you? Thank you, Chairman. There are 3 questions. I have to make it quick. The first one is the Hong Kong dollar currency 2016 we had 1.6 trillion hot money coming to Hong Kong. Now we don't have this table this time. There are a lot of important statistics that are not mentioned. That the Hong Kong dollar, we have seen a drop, and also the renminbi deposit that we have seen a reduction by half. Now all these have to do with the Hong Kong dollar interest rate. Now if you look at the Hong Kong dollar interest rate, we have seen some unusual fluctuation. Now, if I may put this to the Chief Secretary, what is your understanding of this? And also, the DSR, it is something like 60–70%, not as high as 1997. From the bank, we understand that the repayment period has lengthened. In 1997, it was 20 or 25 years. Now it is regularly 30 or 35 years. The comparison is not like with like. If you make comparison using the same repayment period, what is the DSR at the present moment? Third, I've been to Singapore on behalf of LegCo. We attended a parliamentary meeting. We were very concerned about the rising protectionism, but in your report it seems that there is no mention of the worries. In the international trade, they do feel the potential risks. How do you react to this? Mr. Chen, let me respond to this. For the first question, Hong Kong dollar deposit, there have not been much change. Now, under the link rate system, when the U.S. is putting up the interest rate, they've done it a number of times. Hong Kong's interest is lower than the U.S., so there is the carry trade activities, and Hong Kong's interest rate would become weaker. When the interest rate differential is greater, there would be more carry trade, and the 7.8500 will be reached, and the base would be smaller. So this is well within expectation, and there is nothing out of the ordinary. As regards mortgage lending, now for the two tables, I cited the two tables to remind the members of the public that the 70% DSR would make us feel easy. Now, the left-hand side, it shows 16 times in terms of the debt to income ratio. Now, Dr. Yu has got a point. Now, at the moment, the interest rate is less than 2%. In the old days, it was 10 to 12%. Now, over a period of 30 years, the repayment would be smaller, but 20 years, it would be higher. Certainly, there would be some implications. Can we provide an adjusted table? We can certainly have a look, but we are trying to achieve the same purpose. We want the members of the public, just because they have an easier repayment, they shouldn't ignore the risks going forward. Protectionism, under the new regime in the U.S., there is a risk of trade protectionism. TPP, the U.S. has withdrawn from it. Would there be any other measures? We're not sure at the moment. Now, we're particularly concerned about the BAT, the Border Adjustment Tax. Once implemented, this would have a negative impact on the global trade. This is one of our concerns. Ms. Darely, Chairman, like Mr. Chen said, indeed, the property prices have impaired the affordability of the public. The DSR has hit an all-time high for the last 17 years. Now, we have seen some new launch of new housing, it is $19,000 per square foot. Now for HOS, it is hitting all-time historical high, and we were very concerned. The middle-class people are telling me that they simply cannot afford these soaring property prices, and the property prices are showing signs of a bubble. This is beyond the affordability of the people. Hong Kong's economy is not doing well. Mr. Mok said there is layoffs in the IT sector. There are large corporations that are laying off people. Many companies are tightening their belt, and they are very cautious about creating new posts. Our economy is not doing very well. Mr. Chen, the government would like to stabilize the property market. There are so many measures rolled out, and the mortgage requirements have been tightened by the Hong Kong MA. Now, with all these measures, the real estate prices are hitting historical high. They're peaking out. Other than telling the public that there would be interest rate hikes and they have to look at their affordability, what other observations, what advice do you have for the members of the public? Is the property market becoming insanely high, and there is a bubble? Now, how would you feel about the situation given the interest rate hikes on the horizon? Thanks very much for the question. I think the basis for discussion is whether there is any cycles in the property market. If you believe that the property market will only go up and not down, then there will no basis for discussion. In a cycle, there will be an uptrend since the low point in 2003. We haven't seen any let up, and Ms. Lee pointed out the concerns about the lack of affordability. Now, there are so many people going into the market. It's a bit like the situation about 20 years ago. People queue up a long time to purchase the property at high prices. What the Hong Kong MA can do is to maintain the stability and security of the banking sector. After 7 or 8 rounds of measures, so the bank's resilience has improved.
The public need to understand they're undertaking a substantial risk if they are borrowing 85% regardless of income, and if the 15% down payment is a loan from relatives, they are actually facing a large risk. Oh, Mr. Chan, I'd like to ask you, you refer to a peculiar scenario. Our property prices relative to household income are at 16 times, and for new unit sales, their sale price is 19,000 per square foot, and there still are long queues. Do these people have a lot of cash on hand? They don't need to mortgage? Are they paying? And how much percentage mortgage are they borrowing? Well, we don't have a lot of these mortgages are provided by the real estate developers, not banks. We don't have the figures, but from what we've heard, a lot of buyers, they don't have a strong affordability, but they feel that if they don't buy, they won't be able to purchase in the future. So there's an assumption that prices will only go up. We're talking about 19,000 per square foot. If they don't buy now, it will be more expensive. It will not be cheaper. So they already have limited affordability, and therefore they are even more enthusiastic in queuing up now. Now, Mr. Chan Ginpo, I am independent executive director of the Bank of East Asia, and my question is about page 26 of your slide, and we see regarding bank financial inclusion, there are more branches being opened to serve the disadvantaged. But as we develop, we should have less branches. It's happening in the mainland as well, and they are downsizing tens of thousands of people. So I want to ask Hong Kong MA regarding actual needs. So what's the policy towards adding branches? And second, difficulties in opening a bank account. We had participated in a discussion forum. It's an international incident now. people cannot open a bank account in Hong Kong, how can you be a financial center? And Singapore is already advertising that, and I think it has a large impact on Hong Kong. I know that MA has done a lot of work, but if we can have figures on the number of declined applications, do you have that information on hand? That is, how many people have been denied opening a bank account? And recently we have been hacked by malware, and we have a lot of cybercrime where fraud is conducted, and it's more than actual bank robberies. So that leads me to worry that if banks are hacked, then we will have astronomical losses, not only with the deposits but also the banks themselves. Thank you, Mr. Chan. I'll try to answer the first two questions, and Arthur can deal with the third. Well, financial inclusion, we want the banks to provide services to grassroots, but the global trend is moving towards digital internet banking. That is, you'll use your mobile phone, or you don't need a bricks and mortar bank. We already have ATMs that are very stable, and we now have video conferencing facilities. You can just scan your ID or your card, and then there's a virtual teller interacting with you. So for remote areas where they cannot open branches, these machines can solve some of financial inclusion problems. But I agree, the global trend is to do internet banking, and difficulty in opening a bank account. Just now Arthur had explained, we are the MA repeats its stance that it has been difficult to open an account because of AML, anti-money laundering. There's more due diligence, but that should not be a reason to deny people a bank account. So last September, we issued a clear guideline saying opening a bank account has to be risk assessed. You cannot paint with a broad brush stroke and say a certain group of people are high risk money launderers. So perhaps Arthur can deal with the third question regarding the opening a bank account. Do we have statistics on the people denied? We do. In the last year, we've been watching it on a monthly basis. It's been declining. That is, more bank accounts can be opened, and the number of denials are less. The average ratio, it's lower than 10%. But most importantly, the denial, starting from last year when we started dealing with this problem, we said that it's not generally applicable to all banks. It was just particular banks. If we look at the denial of a bank account, it's not a big problem. Why do the customers have a strong feeling? It's especially for foreign enterprises, they automatically go to certain banks, and under these circumstances, we see certain banks, they have a higher denial ratio, so customers have a strong feeling. So we have a two-pronged approach. We have some remedial measures, and we also want to remind the customers that they have choices in Hong Kong. Well, regarding technology risk, we had a specialized team to look at bank technology risk, and recently we see ransomware attack. Hong Kong banks weren't affected, but we're not going to be complacent. We will continue to have a focused team to deal with it. So even banks in their individual fight against ransomware, they're not might not be doing a good job. So we are coordinating their efforts. We want the whole banking sector to fight as a whole. If we don't have follow-up, Mr. Leung, go home. I have a question regarding the Bond Connect. It encourages, we want to make it more convenient for cross-border transactions. So will MA also purchase bonds? Will you also sell bonds? Will you be holding sovereign bonds? In our portfolio, we don't have mainland bonds. It's either yes or no. You don't have to explain. We do hold renminbi sovereign bonds. How much? For each different asset, we did not break down the constituents, but we had mentioned that initially he doesn't have the statistic. Can you calculate it? You don't have to answer me now. You can provide the information after the meeting. Second, if a Bond Connect is implemented, will we hold more mainland sovereign bonds? Well, we already have a channel to invest. We've already invested. The Bond Connect is making it more convenient for other investors. You are asking people to purchase your product. So it's hard for them to purchase, and you are therefore providing a platform. So this highway, you will continue on the highway. I know you don't have to explain. Do you have any plans to hold more bonds? Could you tell me yes or no? Because of implementation of Bond Connect, we don't have plans to hold more mainland sovereign bonds. I feel the property price increase is not related to MA. I think it's a land supply problem and a land policy problem. How much land do we have to build property? So you can regulate mortgages, but when you regulate mortgages, there are some side effects. It makes public livelihood more difficult. So when you have measures, the real estate developers have countermeasures. Do you have any measures to deal with the real estate developers? Because they are telling the buying public that don't worry, the real estate developers can provide mortgages or incentives. Do you have, what do you do? How do you deal with that? Well, just now in our diagram, we described our measure on 12th of May. It deals with real estate developers where they provide a lot of high-risk, high-ratio mortgage for the buying public, where the buying public feels it's easier to purchase. So regarding the bank's financing to real estate developers, we enhance the risks. Just now, Mr. Leung, you are correct. Our responsibility and ambit lies with the bank's risk. So all we can do is enhance the bank's ability to deal with risk. So whenever you see a counter cycle, it's devastating. So you're saying you have to look at, keep a closer eye on the banks, and you have to do a better job on risk assessment. But if the real estate developers are well-heeled, they can they can have countermeasures to offset your measures. So that could be a big potential catastrophe for the Hong Kong public. Well, purchase of real estate is not wealth management. It's different from layman's wealth management products. Just now, Mr. Leung, the legislator, is correct. A lot of factors affect the real estate price changes, land supply, property supply, and so on. But what we've pointed out is that the public, their affordability, and property prices are out of step. You can describe it as a bubble risk, but I would say the market is very flexible. If you believe in a cycle, we are now in an upward cycle. It's continuing. 10 plus years, that is not normal, and I think that it's because of U.S. interest cycles. They're at a very low, and also we had quantitative easing. So even so, the U.S. is starting to normalize interest rates. So our risk awareness has to be enhanced. Lastly, I'd like to follow up a little bit. The Lehman incident is still fresh in our minds. The Lehman bonds were given a high rating, and now Moody's has downgraded the mainland and Hong Kong. The reason is because of our political, economic, intimate relationship. But they had not considered that under one country systems we have our autonomous economy. We have our own finance policy. We have a financial surplus. So I'm worried if other international credit rating agencies follow Moody's example. What risks does that entail, and how can we deal with these issues?
Second, the downgrade by Moody on Hong Kong, what impact will that have on the Belt and Road and also the Bay Area initiatives? But the rating agencies do have their own procedures. They will meet us and will explain the situation to them, and they will have to respond to their worries. But at the end of the day, the rating agencies have a process of their own. Our international rating is pretty high. Moody has downgraded Hong Kong one notch, but S&P keeps the AAA the highest rating for Hong Kong. So internationally, our rating is pretty high. In future, as long as our economic fundamentals are good, and as long as we have good supervisory structure, and if we can withstand any changes in the market, then we should be able to maintain a high level of rating. After a while, when the situation in Hong Kong improves, I'm sure that Moody's might adjust it back. I agree with the chief executive of Hong Kong MA that Hong Kong's fundamentals are good, and I hope that the market will show that Hong Kong does have good fundamentals, and that would set people's mind at ease. All right, there are three more members for the second time. Mr. Ronick Chen. Now, I'd like to ask about the affordability of the households for mortgage. Mortgage lending and the lending by credit card, they remained unchanged. but for other loans, it has gone up to 67.1% in Q1. So for these other loans, personal loans, are they for consumption or they are arising from the second mortgage? Is this something that Hong Kong MA would be concerned about? Yes, loans for other purposes, we don't have the breakdown in this regard. A year or so ago, we did ask for an analysis from the banks. From the statistics, it seems that the major growth arises from the private business sector. They've purchased some loans, and they offer the financing. Now, 2/3 of the growth arose from that area, and the other one is the tax loans. We've seen a drastic increase over the past 2 years. Is not related to direct consumption loans. We are going to be asking the banks to update the latest statistics and see how it goes. Mr. Chen Kim-bo, annuity. Now the return is 4%. A 65-year-old man with $1 million each month will get $5,800. The interest rate is going up. Next time it may hit 5 to 6%. It's going to be more attractive. The $1 million will be insufficient. Now, will you increase to $50 billion or $100 billion as the total size? Second, about the investment situation. In 2017, you have $6.4 billion for bonds. Now, if you mark to market, there may be a loss. How do you control the risk in this area? Right. Thanks very much, Mr. Chen. Life annuity. Eddie already said in his briefing that each person would be $1 million. The total amount is $10 billion. Now, of course, we would have regard to the market response. If the market is not good, 10 billion may be too much, but if the response is good, maybe this is not enough. We arrive at $10 billion. We have to consider the risk management. Annuity is not the same as the monthly contribution that the insurance company would be investing with the money, and there will be a separate pool of investment. For annuity, the annuitants would get the money every month. In the market, it would be hard to predict the risk. Now, if you have $10 billion and make investment, and if the market is susceptible to fluctuation, then the $10 billion you may make a loss. It would be hard to recoup the loss. Now, with 4% return, this is for the long term, and that's for the annuitants. So this is not a short-term projection. If for the first year there is a loss to the principal, then it will be difficult to recoup the loss. So we are trying to do this bit by bit, year on year. Now, if this is good, for 5 years, it will be $50 billion in annuity, and that's a big business. So you're going to do this per year. We haven't quite decided so early, and we need to have the licensing first, and then we're considering the sales network. So all these nitty-gritty will have to be threshed out. We will work on the basis of experience before we can say whether we will be launching similar amount every year. If it is secure, then it may not be a bad idea to have more. Next, Mr. Leung Kwok Hong. Also, on the Bond Connect, do you have any outlook? Once this platform is in place, do you have any projection as to how much business will there be? Chief Executive, we don't have any quantified target. The bond market in the mainland is open to foreign investors. What we're doing is to offer more channels to make it more convenient. Overseas investors, if they want to buy mainland bond, they can go through the CMU in Hong Kong, and we have the new trading platform for them to engage in the trading of the bonds. These are facilitation measures. We would like to attract those who haven't gone into the mainland bond market but are interested, and they would find that this would be far more convenient than the existing channel. To answer Mr. Leung's question, we don't have any quantified projection as to how many people will be taking advantage of these facilities. Dr. Edward Yu? Well, Mr. Leung, you don't have any projection, so you don't have any ideas with this platform, how much business will there be? I find this mind-boggling. You must have some projection. Moody has downgraded us because Hong Kong is perceived to be linked with the mainland. Now, under the Bond Connect, if the response is not good, then Moody will further downgrade us, wouldn't they? Make it brief, please. Well, this is not how I look at it. This is the financial infrastructure. Once the infrastructure is in place, it will not be considered good if there is congestion. This is a connect scheme, and one more channel is far better than having less channels. Well, you have the big RMB pool. Now, this, by comparison with the mainland market, is very small. We still have a long way to go. The development of offshore market, now this kind of facilities will help us strengthen the offshore renminbi business. Dr. Edward Yu. Chairman, I'd like to follow up on the question. At the moment, do you have any figures from January? You talked about $1.6 trillion parked in Hong Kong. That we've seen a drop in the balance. Do you have any update? The inflation rate in Hong Kong and inflation in the mainland of China have shown some easing. In Hong Kong, the latest figure is something like 2%, but for the previous 2 quarters, it was very, very low. So, what is the Hong Kong MA's prediction of inflation? Is it because of the shrinking in the currency supply, or what is the reason for the decline in inflation? Well, for the currency base, we can give further details, but it has not shrunk. Under the currency board system, we do have a real-time reporting system. If the currency base has reduced, then we have to make a report how much, by how much, and when. As to inflation, over the past 2 years or so, given the global economic downturn and also the commodities and energy prices have dropped, the global inflation has also decreased. There are some advanced economies that are worried about deflation. This is a global situation. In the mainland of China and in Hong Kong, indeed, we've seen a decline in inflation. But as the economy is coming back to normal. The sentiments are better, and the commodity prices are stabilizing. Then inflation would be experiencing a moderate trend. Last speaker, Mrs. Regina Ip. Thank you, Chairman. Thanks very much, Mr. Chen, for bringing us some positive news. Your predecessor, Mr. Joseph Yam, said that this is the 10th anniversary of the financial tsunami. The next tsunami is going to be worse than the last one. How do you respond to this? I'm sure that you must have some contingency measures. You must have some black swan projection. The Security Bureau did have this kind of projection. So financially, do we anticipate any black swan scenarios? Thanks very much for the question. The Hong Kong MA attaches a great deal of importance to financial stability. This is top in our priority. We have to strengthen the financial and banking stability all the time. 0708, after the global financial crisis, the financial institutions the world over under G20 have undertaken a great deal of reforms. The capital adequacy ratio and also their resilience in the face of shocks has also increased. Now, there are big banks and financial institutions that are too big to fall, and the government has to underwrite them, and measures have been put in place. Last year, thanks to members' efforts to endorse the bill, we have the measures to deal with the large financial institutions, and the government cannot underwrite them because they are too big to fall. And all these would make the financial system that much stronger. In Hong Kong, there is overheating in the property market, and there is risk for the banks. Since October 2009, we have introduced so many rounds of measures. Mrs. Yip talked about, Mr. Leung talked about the property prices, and that's not the Hong Kong MA can influence. That's true, but we will not slacken our efforts in this regard.
So on the 19th of May, we had a new measure to further enhance our bank's resiliency against counter-cyclical events. Well, we conclude this item, and we have to thank Mr. Chan and his colleagues giving us such a very detailed presentation. So as we continue to agenda item number 4, that is developments after implementation of the 4-pronged approach for tackling money lending related malpractices. So we from now to 12:25 we can handle this agenda item, and let's invite government officials. So please conduct your presentation in 10 minutes. Thank you, Chairman. Our paper describes the measures we implemented last year relating to malpractices. Some people claim to be intermediaries. They use different excuses to collect exorbitant fees from clients. We also see that a lot of advertisements encourage spending, and the public therefore neglect careful financial prudence. So in our 4-pronged approach, we strengthen the law enforcement, we enhance education, we provide free information, and we exercise more stringent moneylender requirements. So from October 1st last year, we had more stringent money lenders licensing requirement. The purpose is to implement the requirement that all money lenders and their associates cannot charge any extra fees. So according to this new legislation, if there's a third party involved in the process, the third party is an appointed intermediary of the relevant money lender and does not charge the borrower any fees to prevent them from being defrauded. We also expanded the register of money lenders to include the relevant information of the appointed intermediaries of money lenders, and we also made some requirements that all money lenders in their advertisements, they need to have they also need to provide a reminder that they should not that borrowers should not pay intermediaries, and they need to repay all their loans. So we also have operations and visits to ensure that these requirements have been met. So I'll delegate the second area to my colleague to elaborate. We also have work with NGOs where we have 24 dedicated 24-hour telephone hotlines. We have two subvented non-government organizations, that is the Caritas Hong Kong and Donghua Group of Hospitals. So we also provide counseling to people who are in financial difficulties, and they can be referred to other institutions for further counseling. So in the first year operation that has just concluded, we have close liaison with the two NGOs, and we know that there's 7%, 160 cases, the hotline callers, they suspect that they might have been defrauded, they might have been conned or encouraged to take out a loan, and of the 160 cases, the two agencies will suggest that the caller seek assistance from the police. Third, we strengthen public education. We have a series of measures to remind members of the public who intend to seek a loan that they should take precautionary steps. They should check with the register of money lenders to verify the identity of the intermediary, and they should not pay the intermediary. We also have a little pamphlet we educate the public where intermediaries might commit fraud. And in our fourth area, we strengthen law enforcement. After the new measures in the first 4 months, the police have told us that compared to the same year, they received 70% less complaints. And in the first 4 months, some 40 cases, the police believe that they could further investigate and deal with the complaint. So these cases are still under investigation. And of course, according to past experience, the complainants related to intermediary fraud, they might feel they have been defrauded, and a report at a later stage. So we will work with the police to see if there will be any changes in the trend, and we also need to follow up to see if the MO of the fraudsters have changed. I'll now defer to my colleague for some further elaboration before I make a summary. The Moneylenders Register started operation in this January. They conducted site visits to the moneylenders' Office of Business to ensure that they comply with the additional licensing requirements. And as of the end of March this year, the Register of Moneylenders had conducted 258 visits and confirmed that the majority of moneylenders are in compliance with the new licensing requirement and conducting their business. And for the small minority that have not complied, we have taken immediate action, including issuing letters to the money lenders concerned, requiring rectification within a specified period, and where necessary, arranging a second site inspection. As at 31st of March, the CR has issued letters to 38 money lenders. That is these reminder warning letters. So these follow actions have been effective, and the money lenders concerned have either completed rectification actions or have taken steps to rectify the non-compliance. Now, regarding the advertisement requirement, the Secretary just now has said that we require the money lenders need to add the slogan that they shouldn't lenders shouldn't or borrowers shouldn't pay the intermediaries, and all loans need to be repaid. So the register has been scrutinizing the advertisements, and if we detect any non-compliance, we will issue warning letters and require the money lenders to make rectification within a period. So as of 31st of March, the register has issued 44 letters to these money lenders, and they had all rectified the non-compliant advertisements. Thank you, Chairman. Let me add a little bit that if we look at our experience in the last few months, we're very happy to see that the public have enhanced their awareness. First of all, we give them a channel to verify the information. We also conduct a lot of education. So in the coming few months, we will continue to implement new programs. So we will issue new pamphlets through our tax information. We will have campaigns that will set aside resources for new pamphlets, and we also pledged that we would conduct a review. In light of the number of complaints and the cases, there is going to be some time lag. So we hope that by the third quarter, we can have 6 months worth of data for the review, and we can consider whether we need any new measures or fine-tuning. So 4 members wish to speak: Mak Mei Gyun, Lam Kok Hong, Chen Zhan-ying, and Wu Ji-wai. Mak Mei Gyun. Thank you, Chair. First of all, I welcome the government's efforts, because I had received 200 plus fraud complaints. It's exceeded 400 million in total. We have some cases that are undergoing a legal process, and we see that after the new measures, the number of complaints have come down. The number of fraud complaints have come down, but the severity and complexity has gone up, and the amount involved has gone up. We think that some intermediaries, they have a company in operation, and they might now defraud millions of dollars, and now they abscond. So, to a certain extent, the problem is being handled, but the severity has not been affected, because now the fraud sums are getting larger. I see in the paper that there are 706 intermediaries So I want to clarify, these 706 are not 706 companies. There might be, we might have one institution serving a few money lenders. So is there any overlap of the information? And you said that you had 258 site visits. So we had liaised with the industry, and they say that you do inspect their operations. And we know that the money lenders, some don't have offices. Some say they can do it over the internet. So have you conducted visits of those? And what difficulties have you encountered in the site visits? You say that you issued 30-odd warning letters. And where have they not complied? Could you answer these questions? Thank you, Ms. Mack. First, on the number of intermediaries. Our paper mentions that when we implement the new requirement of the MLO, we cannot have any gray area or loophole. So no matter what business they engage in, any third-party business has to be conducted through an intermediary. We know that a lot of money lenders are conducting individual loans. They work with vehicle car sales, and it's not directly related to some of our work. Whether there's any overlap, I can defer to the registrar, and she can also answer the questions about site visits. Thank you, Chairman. The 706 intermediaries, they are appointed by a few money lenders, so there is some overlap. And regarding the site visits, we go to the licensed money lender's office. Especially, we want to see whether they complied with our extra licensing requirement. So even if they don't have a ground floor office, we will visit their offices. Now, regarding our observation, they are very cooperative. Let's say we require loan agreements. They are very cooperative. They present all the information, and if there's any non-compliance, the majority of non-compliance, some 60%, is they have not kept full records to the borrower, that is explanation of the contract, because one of our extra requirements is that the licensed money lender state clearly and explain clearly the loan agreement, but there's also an extra requirement.
And they have to have a written record or audio record. We find that 60% of the licensed money lenders do not keep this kind of record, although most of them said that they have already done the explanation. So we would insist that they keep such record. About 30% of the cases do not attach the intermediaries agreement in the loan agreements, and they do not specify whether there is any involvement of intermediaries in the loan, and if so, the names, the address of the intermediaries, and the relationship with the money lenders. So in the loan agreement, there is an absence of such information. So we reminded the licensed money lenders that there would be a second site inspection that would be conducted, and we would require the site of agreement to see whether they have complied with the requirements. I've got more questions. I'll try the second round. Mr. Leung Kwok-hong, 4 minutes, please. Now, for those with controlling powers in the register, it should be you would amend the proposal. Why is it that there is not a register that would be open to the public? Let me clarify, Chairman. Are you talking about 1617 bracket 04, paper bracket 04? What paragraph? There's 993 CB1 983 16 to 17 bracket 04. 2.32. So the register should be accessible to. Would you like to take the question individually? I can't find your paragraph. Well, yes or no? The one that I cited, Chairman. Well, Mr. Leung's question is not in the paper. Any further question, Mr. Leung? That's in your consultation paper. If you say no, then it is. I take it as no. For non-compliance. And would you consider any penalty for non-compliance? Chairman, the company's registry already explained that for non-compliances, after follow-up action being taken, they have rectified the situation, and there is no need for further follow-up. There are some that are being followed up at the moment. So we haven't come to the penalty stage yet. For the money lenders, if a penalty has to be meted out, then when it comes to license renewal, we would lodge an objection, and for serious cases, we'll ask the police to take prosecution action. Mr. Leung, they said they've conducted 558 site inspections. Have they got a report for us, for our reference? Deputy Secretary? Yes, we've conducted 258 site visits, 258. In Para 6, we have set out a brief description of the situation. Mr. Leung, can you give us more information about what you've investigated for these 258 inspections? Do you think that proportionally it is sufficient? Chairman, the inspections are still ongoing. We have a number of times on a weekly basis, so this is an ongoing exercise. The idea is to use the resources properly. If we've spotted any problems, we would follow up on them, and that's how we deploy the resources. Mr. Leung, well, can you be more specific? Mr. Leung, your time is up. Can you wait for a second time? Mr. Ronick Chen, Chairman, thank you. Now, these measures to tackle the undesirable practices include publicity. You have the warning, you have to repay your loan, don't pay any intermediaries. The trade is telling me that there are some black sheep in the industry. People do have pretty negative perception of the trade, and their business viability is also affected. There are some proper intermediaries who are suggesting setting up some associations to regulate the trade and to dispel the negative perception. From the Electricals paper, Bracket 05, paragraph 14 says that the government did say that the introduction of a licensing system for intermediaries would give rise to complex issues and has to be considered carefully, and the stakeholders and members of the public should be consulted. Now, has the administration started the consideration, and what is the progress so far? Do you think you're going to consult the members of the public about licensing of the intermediaries? Does the government support this idea? If the government is positive about it, what support would there be for them? Mr. Chen. Mr. Ho. Thank you, Chairman. Last year, we heard a lot about the intermediaries or the moneylenders business, and the intermediaries are bringing the whole industry into disrepute. And for any industry, there are black sheep. I mean, for the intermediaries, for moneylenders, there are black sheep that exist. All these new measures that I mentioned will enhance public awareness of protecting their own interests, and also they would be more confident in patronizing the money lenders. As far as the intermediaries are concerned, we're not targeting at any commercial activities. It is a big question as to whether one needs to use intermediaries if one is to borrow from the money lenders. And there are some undesirable practices of the intermediaries, and therefore we have the four measures, four-pronged measures that I mentioned in the paper. So when people are borrowing from the market, they have to be alert to certain things. Now, intermediaries, what is an intermediary? For money lenders, are we talking about those borrowing from the banks or from financial institutions, or what? Now we're dealing with those borrowing from the money lenders here, and the fraudsters would resort to many different means, and they call them intermediaries, or they call them a representative from a law firm. So when it comes to licensing condition, this is not the prime consideration. And we have implemented the measures for a couple of months, and we have to focus our attention on the modus operandi and see whether they have changed. Even if we license the intermediaries, they may deceive the borrowers under different guises, and it is premature to talk about a licensing system for intermediaries. Although we're not ruling this out altogether, we have to conduct a review first and see what improvement should be made, and also what are the reasons why people are liable to be deceived. The number of cases has decreased, but the amount involved is still pretty high. So we have to get our priority right. Mr. Wichiwai. Chairman, on the question of moneylenders, I would agree that the priority would not be the intermediaries. Rather, in paragraph 12, there is mention of a cooling off period. The government says that it has to proceed cautiously. It has to talk with the trade. Does the government have any specific timetable as to how soon the cooling off period can be or will be implemented, and also the audio recording requirements? In the banking sector, when they sell the products, they have the audio recording, although they may not have the cooling off period. Now that would offer better protection for the consumers. As regards the advertising, there is the warning: you have to repay your loans, don't pay any intermediaries. I think it is good. It's just like the cigarette advertising. Cigarette or smoking is hazardous to health, and that's the warning in the early days. And now we're talking about whether there should be any advertising for cigarettes. For banks, they cannot run any ads for loans. But why is it that the moneylenders can run advertisements for this purpose? So I think there should be an alignment in terms of treatment, and you don't get a message across through advertising, and you have to deal with the licensed moneylenders. And would you consider this? Deputy Secretary, thanks very much, Mr. Wu. We understand that Mr. Wu and his party raised these kind of suggestions before for cooling off period. At the present moment, we have to conduct a review, and basically we'd like to find out about the problems and what measures should be adopted for cooling off period. This is a measure that can accord more protection to the consumer, and we have to consider the actual operation and also the implications on the moneylender and the borrowers. The banks, or for insurance, they have the cooling off period before money changes hand, and there is a cooling off period.
We have to look at this commercial behavior in general. The monetary transaction is immediate, so if we look at it initially, if we want to consider a cooling off period, there would be a large exemption where the borrower might say that they don't need a cooling off period. So how can cooling off be effective? Because if they are desperate, they need money, they might say they don't need a cooling off period, and they might just say they're desperate and they want the money. So we have to consider a lot of actual scenarios, but when we conduct our review, we will consider a whole basket of measures, and we have to consider what needs to be introduced. Do you have a timetable? The review, we'd like to start the review in the third quarter, because we need statistics, and we'd like to understand the MO of the fraudsters. We would like to know why would these fraud cases still occur after implementation of our measure in the 1st of December. We need to shut the door on them and prevent fraud. And when we start the review in the third quarter, we'd like to conclude it by end of the year or beginning of next year and come to some preliminary views, and then we can share our findings with you. Mr. Chung Kok-kwan, Chairman, in the paper, it says that by the end of 31st of March, Hong Kong had 239 money lenders that appointed intermediaries. They do corporate loans, and they do not engage in non-collateral personal loans. So the government, could they tell us how many money lending businesses or licensed intermediaries they have appointed intermediaries, and what's the percentage where they conduct non-collateral personal loans? I'll defer to the registrar. Well, in the paper, it says that as of the 31st of March, the moneylenders registrar has 706 appointed intermediaries information, and in the licensed moneylenders, there are 239 who have appointed intermediaries. So it's about 13% of all. And this information, we require the licensed moneylender to provide the appointed intermediary to us from 1st of December. And we do have a register of moneylenders, and the public can go to our website and see which intermediaries were appointed by the licensed moneylenders. And as of 31st of March, if you look at all the licensed moneylenders, some 13% of them have appointed intermediaries. Now, regarding the percentage of moneylenders that engage in individual loans, we don't have that information. I have a question for the company registrar. It says that the company registry we see that in the paper there are 38 letters. So of the 38 moneylenders, how many of them were engaged in non-collateral personal loans? The registrar or the secretary? I'll attempt to answer. So these 38 moneylenders, we see they have non-compliance, and some involve personal loans, but currently I don't have the information on hand, but it shouldn't be a high percentage. Thank you, Chairman. Second round, Mak Megun. Just now I asked the PAS of the 706 appointed intermediaries, there is some overlap. So now we have a problem. I had met with the industry, and one practical problem is that we see that moneylender A has appointed 1, 2, 3, 4, 5 intermediaries, and moneylender B might have the third intermediary of moneylender A. So could we have a cross-check? Can we reverse the table? We can find how many intermediaries the moneylender has, and could we also look at the intermediaries and how many moneylenders they are working with? So that serves two purposes. So we can know how many intermediaries are appointed by moneylenders, because the 706, we might have less than 706 moneylenders. It might not be exactly 706. We need to gauge the trend. And second, people who are invited to borrow money, the first company they contact is the intermediary, and then they contact the moneylender. The intermediary won't tell the client to go to moneylender A, and then the borrower won't look at the relationship between the intermediary and moneylender A. So if the intermediary, if they can be checked whether they are appointed by any moneylenders, then it's easier to check. So if they receive a phone call and say they are some global intermediary, and they say this global intermediary is not on the moneylender's appointed list, then the public will know that might be an unreliable intermediary, and they don't need to. Otherwise, after they provide all the information, and they go up to sign the contract, and then it would be too late. So I think you should be able to solve this problem. The second is the amendment of the money MLO. You said that under the MLO, if you can do the first step, if you have a half of a register, that could regulate the industry. So in the money lending contract, whether we have a cooling off period, we need more provisions to safeguard the public. Thank you, Ms. Mack. The first point, I agree with you. So last year, when we set up the register, we had worked with the industry, and I'll defer to the registrar. Thank you, Ms. Mack, for your suggestion. That's a very good suggestion. Last year, in December, when we started, we had used two formats to display the information. One is from the moneylender, that is the moneylender's business name, and we see how many intermediaries they appointed. That's table 1. In another table, it's a it's a list of intermediaries, and we see company ABC is intermediary, and we can see that company ABC, how many moneylenders have appointed them. So in December, we had 2 tables, and these 2 tables are freely available from the registrar's website. And we had, as of 31st of March, more than 40,000 downloads of these tables. So let me explain further. The we have 706 intermediaries registered, and these 706 and the so-called overlap, some intermediaries are appointed by more than one moneylender. So roughly some 200 intermediaries have been appointed by more than one licensed moneylender. But if you count the actual number of intermediaries, there's 706. Regarding the cooling off period, I hope I made it clear that we need to, if there are still fraudsters using these MOs, why can they still defraud people? So we need to plug the loopholes. If there are some effective measures, we will consider that. Any more questions? If not, we can conclude this item. Thank you, officials, for explaining. We now enter agenda item number 5, AOB. If there's no AOB, we adjourn. Thank you.